For that, financial tech is surging now. In fact, 12% higher is what we have on financial tech at this point in time. So that stock has also done well. Mr. Tilson, you did say that maybe the market has made a bit of a bottom and there could be problem related to advanced tax. Would you still recommend taking a long position ahead of this Fed event that we have?
See, Anuj, actually, I'm not a technical guy, so giving a technical call probably may be different. We may say that okay, the market can test a bottom of 7,500 and all that, but I gave my broad view saying that the carnage or maybe the selling pressure which we have seen in the frontliner, because you can only mop up a huge funds by selling the frontliners. So that was largely because of the advanced tax payments. Now come on, let's take a call on two events, one of Fed rate hike and second of GST. I think that Fed rate hike is likely to come this time, and maybe a 20 basis point. The market is also saying 25 basis points, because even US Fed is not very confident, but maybe for sake of doing it, because they kept it postponing for such a long time. So that also reflects an indecisiveness on their part, which they may want to break. So that event also, because market has gone huge short and people are in fact covering the short as well. They don't want to sit on short positions ahead of an event. So that is practically got neutralized because of that selling having abated in the frontliner because of the advanced tax payment date behind us. Come on the GST. You see, people, yesterday there was news from the finance minister also that it is inconclusive. This session will also be washout. And again, in that case also, for that also I've said that events will, or the discussion, serious discussion will only start from 19th or 20th. Because we are all used to doing the things at the last moment. I don't think that, even Congress have said that the talk is inconclusive. It is not end of the discussion. So I'm hopeful on that also, because they've given the Mallikarjun Khadge instance that he was not there in the discussion, so we couldn't see. One leader cannot, ultimately the instruction has to come from top, and we know that that top guy, So again, I am not ruling that out. Maybe 70% chances are there of GST, hopes building up. So taking all these factors into consideration, definitely, you need to have a positive view on the stocks. And at that time also I said, maybe like HDFC, Glenmark, Bharat Forge, Lupin, these stocks which have all hammered, or may have taken a huge beating, can again be looked into. Maybe Amara Raja, maybe UPL. These are the stocks where the buying can be again initiated. But yes, if you are looking purely as a trader with some stop loss or some target in your mind, probably you may not be able to play in the market as a trader. Yeah.
All right. In fact, there are a lot of stocks picking up. As Mr. Tulsian pointed out, it's all about the mid-cap space today. Take a look at Coffee Day. That one has gotten hit very hard since its listing, but today the stock is up almost about 7.5%. Coffee Day should come up for you on the screen. It's a big move that you're seeing over there. ABB India is also up almost about 6.5% in trade today. And we've been talking a lot about Majesco, but Mastech is not far behind. Mastech is up 6% in trade today as well. Parag, we have been talking about some of these smaller stocks, the mid-cap names. And one stock that you've liked is Jamna Auto. This one has been making higher tops and higher bottoms in the last many weeks and months. Is there still more value in this name?
Yeah, so basically, so we also don't have active coverage as of now in the stock. But the more I study, the more I like about the stock, because see, the company has a market cap of around 950 crores and net debt is just 50 crores, and 6-month EBITDA was 65 crores. So there is absolutely no concern on the balance sheet. It has 64% market share in OEM CV market. So MHCV is a main segment. Tata Motors, I think they have 95% market share. Ashok Leyland, Tata Motors, Benz or Volvo, so everywhere they are present, and we are very bullish on CV cycle as we have discussed earlier also, because of the infra build out, road, coal production increasing. And plus, if this new thing about more than 15 years old vehicle will be banned, if that comes, and looking at the developments around the climate and carbon emission things, I feel that this time it can come true. And then this company has a huge benefit, because the entire CV population, so everything above 15 years needs to be replaced, and these guys are present everywhere. Plus they have a large aftermarket to be addressed, and from last year their aftermarket sales was 150 crores. This year they are looking at around 300 crores for where margins are higher again. So I think enough triggers for it, and trading at around 6 times EBITDA and 10 times on PE basis and on FY17 basis. So with ROE and ROC of 30%, operating cash flow last year was around 50 crores after paying interest, and this year the PAT is going to double. So I think stock looks like a bargain buy with enough triggers in it.
Okay, by the way, the top F&O loser in the morning was Tata Motors DVR. It's almost the top gainer now. Look at the intraday chart of Tata Motors DVR, and that stock has surged now. The Tata Motors stock itself has recovered quite a bit, but the rally is sharper in Tata Motors DVR. If you see the intraday chart of both Tata Motors and Tata Motors DVR, you'll notice that the spike is bigger in the DVR. Prakash, technically, Tata Motors or the DVR?
Anuj, looks like it's a reactive up move here. There is some kind of a resistance on Tata Motor DVI in the region of around 285. Only if it crosses 285, then we can say its up move is there. So far, it still looks reactive in nature.
Okay. Well, let's also get Varun Goel into our discussion. He'll be with us in just a bit. But before that, let's continue our chat on some individual stocks. Mr. Tulsian, talking about some of these really good listings, there's the Narayana Health IPO that's opening up on the 17th of December. And this one has very good lineage, promoted by Devi Shetty, etc. But looks extremely expensive. What would your call be to investors?
See, Sonia, actually promoted by Devi Shetty, because actually you can say that the whole company revolves around him. So even that is a negative factor, because you just can't say that the company look upon one person. So that's I will not take that as a positive, number one. Number two, if you come on the valuation, EBITDA margin is at 11% against Apollo having EBITDA margin of 13%. But the EBITDA multiple which is being asked now by this company, Narayana, is 28 times and Apollo is ruling at 25 times. You just can't have, you need to leave something on the table for as an IPO valuation. So suppose even if I say take as 20% as the benchmark, which is the room we must leave for the prospective investors, the EBITDA multiple should be at 2021 while it is at 28. Why, you tell me why I will buy the stock if I get Apollo Hospital at a EBITDA multiple of 25? Come on the bed capacity also. Apollo Hospital has almost 80% higher beds, maybe 5,500 beds of Narayana against 9,500 of Apollo. So taking all this, yes, you can say that they will be ramping up, the Narayana will be ramping up their bed capacity going forward with a least capex, because they are going into the PPP model, like Vaishno Devi, the trust will be providing all the things, they will only be carrying out the conducting operations and all that. But still, I don't think that kind of valuation is justified when you have a comparable peers available. I'm not in fact comparing them with the lower peers, with the lower companies having a lower capacity, bed capacity and all that. But in comparison with Apollo Hospital, it is looking maybe about 15% expensive, which is not acceptable in any IPO valuation.
Okay, well, the Nifty is at high point of the day now, so 7704 is what we have. Mithil, since you look at the options side as well, what's a good strategy for someone wanting to trade on this binary event of Fed rate hike? How would you approach the Nifty?
Anuj, I think the Fed rate hike is already priced into the market. August was a time when the market, in fact, all the global markets in the world, they reacted to the possibility of a Fed rate hike. Now, even if Fed raises the rates this time, day after tomorrow, I don't think Nifty is going to move that much. I haven't seen the volatility really expanding on the upside. So the best strategy in that case is to sell options. But then again, that leaves a lot of, unlimited loss that you can take. My suggestion is right now, Nifty looks, after breaking the 7650, 7660 resistance, the Nifty looks on its way on the upside. Maybe 7770 or 7800 will be targeted. It is too less a kind of a reward for somebody to trade on this kind of thing. So my suggestion is right now do not trade at all. I do expect Nifty to eventually reach 7290 to about 7250 level. That will be a very durable bottom. I am not going to buy Nifty just because a double bottom has been created at 7550, because 7550 at least from a technical sense is not a very strong kind of a support area. My suggestion is do not play the uptrend, but if you get a chance, to sell this rally which is going on, the short covering rally that is going on, that will be much better. at this point of time.
Okay, fair enough. So sell into the short covering rally. That would be the most prudent strategy right now. It is a pretty ferocious short covering rally, you'd have to say. So 7700 is here on the Nifty. But we have about 10 more minutes to go. So let's invite one more guest into our conversation. Varun Goyal of Motilal Oswal also joins in. Varun, hi, afternoon. We were just discussing some of these aviation stocks that are hitting fresh highs, you know, the likes of Jet Airways, Indigo, etc. Do you have any views on this, and would you recommend investors to go for it, or is this just a trading move?
Well, good afternoon, Sonia. I think as far as aviation sector is concerned, I think there is no denying the fact that there is extremely strong growth as far as passenger traffic is concerned. I think this has been continuing for last several months now, and we believe that considering that where the ticket prices are, this growth should continue. However, having said that, I think this has been a very, very difficult sector with concerns on leverage, concerns about the overall economics of the business and all. But I think of late there have been new entrants, the companies which have consistently delivered 100% plus ROEs, unlevered balance sheets. We definitely like businesses which are able to grow at a fast pace without requiring a lot of incremental capital. So I think those companies which qualify those criteria, which companies which have good dividend yield and good 30-40% kind of top line and bottom line growth, these are the companies which should do well going forward, and we would be positive on those companies.
Okay, let's talk about some more stock ideas then. Parag, you have two more mid-cap ideas for our viewers, Chola Finance and Gulf Oil.
So again, same in line with view on CV, LCV, commercial vehicle pickup. Chola, of course, is a little bit expensive. We have been recommending it since long, but now it is trading at close to 2.9x FY17 book value. But the management pedigree, the technology which they have adapted, and their and the accounting practices. So, for example, they had a time till FY18 to go to 90 days NPA provisioning, but in this quarter itself they did it at 120 days. So, I think the management pedigree and of course the growth in the business cycle, which will be led by, as I told you, CV cycle, we are very, very bullish on. So I think it's a great compounder which will give you 15-20% returns. Gulf Oil, of course, again a CV play, but it's a lubricant company, benefits from lower oil price also. Plus, some of these companies like Gulf Oil and or say Jamna Auto, they have great asset turns. There's net sales to net block is very high. In Gulf Oil case, it is around 8 times. So ROE, ROCs are much better. Plus, they are expanding their capacities by 50% in Chennai. So, and a very good ROE, ROC company. Plus, they have gained market share over last 3 years. And they are making inroads into two-wheelers also, where margins are a little bit better. And brand equity is, strong. So, it revolves around same theme of CV, all three stocks.